Hi, this is Greg Bridges with Trading Pips. So today we're going to go over the AUD NZD in the hourly time chart. So pretty much what I'm trying to show you guys today is where to put your support and resistance lines so that you can get in for a buy or sell. If you look at what's going on with the AUD NZD in the hourly time chart, you can see that it hit a hourly high around here, which these are called wicks. So this is the body of the candle, and these are the wicks. So it made it all the way back up here before starting to drop all the way down. So are we trying to catch? Are we trying to catch it at the wicks high? Yes and no, we can. But today I'm just going to show you where you would put your support and resistance lines. So what are support and resistance lines? A support line is where the market is going to be holding up at where it hit at, which would be down here before going back up, traveling all the way back up or up to a different area, right? So you have minor support lines and minor resistance lines. You have major supports and major resistance lines. So what I would do in terms of me and making a resistance line, you can make a couple, but I would say to keep it simple, I would put one right here. I would move it down to right here to the body of the candle. And then I would change that color to red. So by me changing that color to red, I'm saying to myself this is a resistance area. So around this area right here, 104,759, I believe that the market could hit this area, then travel back down as it has done in the past, right? So this is all historical data. It happened in at different time frames. So you look, it's happened in February 21st, something like that, before traveling down, going up a little bit, going back down, then going up, boom, 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 boom. It hit it again, and then it started going back down, right? So when the market opens up today, it's going to open up somewhere around there. It may go up, it may go down. I'm not sure. But I know for my hourly time frame, I know that right around this area is going to give me some type of resistance. Now, if you look at these up here, these are the wicks. This is how high that the market reached in the hourly chart, right? So if I wanted to, I could use this as a possible um, resistance line as well, saying that when it got up this high in the hourly chart, um, it resisted going through and it dropped back down. So once again, I would click on that, and then I'll once again put it right there, and I could put it at the tip. You can also zoom in if you want. Um, so that's almost on the money for the most part. So for me, what I like to do in the hourly view, like I said, I will go to properties, and usually I would use red, but for this case, I'm saying that hey, this is the high. This is the high of the high, right? So I will either change the color, let's say to gold, to me to indicate to me, gold or yellow, to indicate to me that hey, this is the high in terms of where this wick was going. Boom. So if it did go past this body area and started shooting up, I would then really think about trying to get in right here for another trade, for a sale, right? Because I'm thinking it's gonna scroll all the way back down here, which it did in the past, and shot all the way down, and then it did the same thing. Boom, and you see that it's going down. This is recent. So now we have our two uh, support resistance lines. So I use gold, but just to make it simple, I'll change it back to red. So we have two red resistance lines, one for the body of the candles, which are these right here, the body of the candles, and one for the wicks. All right, so we could get in on a trade up here, we can get in on a trade right here. Either way, you see that it's going down, right? So we would then look at where it usually goes to. So if you look back in the past, you'll see that it was down at this area before going up, hitting here, and then started going back down. When it went down right around here. That's the body of the candle. So if you go back in time, you can see that that's close to where the original ones were. So one can assume that you could either go by this one or you could go by this one, which is what's the historical data, and say, all right, if I go by this one, you could see that it hit over here a few times, it hit over here a few times. It did still go down to this area, but it still hit. So if you were going to use that as a support area, you would say it hit that area, went down a little bit, and then decided to go back up. So me personally, I would use the old charts as as my um as my support area, and I would change that color to green, which resembles to me lime green. I would say that, hey, when it hits this area, it tends to go back up. And once again, this is called historical data. This is stuff that already happened. It went down, boom, it came up a little bit, went back down to around this area, went back up, dropped down a little bit. But you see these wicks. These wicks are showing where it hit this area. It was hitting this area constantly. And then before going back up, boom, to that, and now going down. Now you see, this is the last candle that happened on Friday before the market closed, and it went underneath the green. So had you or me decided to sell up here or up here, we would have watched the market go from up there to all the way down to here. So if we would have sold from here or here, we would have had our take profit set for right here where this green line is, and it would have took us out the trade right here, making us some money. So this green line we call our support line. We also could draw another green line and say, hey, we believe that this is a support line as well, because the wick is coming all the way down here. So if we move it, can move it to right around here. We also can move it all the way down about right there, and we can say that this area right here is a support area, or this is a support area. Either way, if you would have bought down here, it would have went up and made you some money before going back down and then going up and then going down for a short term and then going all the way back up. So these areas right here would be considered as minor resistance areas and minor support areas before going back up. So this area right here would be considered a small term minor resistance area, and this right here would be a small term minor support area because it shot right back up. These, for the most part, as you can see, if you go back in history, boom, 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 it's pretty much a long term major um, support, or I would consider it that. So I would put my money on the sell right here for it to drop down, get out right here, boom, or I'll put my money on a buy right around this area, or right around this area, which is 103,948, which I actually have a buy in at um, on my forex.com. And I'll show you guys just by clicking over here. And this is my AUD NZD chart. And as you can tell, I'm $16.67 good on this trade. So if you look right here, it shows that I got in at 103,997. That's why I set it at on forex.com. And this is my take profit. Um, and I have it in at 12 cents. So basically, what happened was I bought in right around here. It went up, and you see I have a another um, support line right here, but it went through, and the wicks actually almost touched where I was supposed to get out at, but it barely did. So I moved up how it looks, just moving it up a little bit and zooming in. And you can see where the wick set, it barely touched my take profit. So I got in on this sale. I got in on this as a buy. Down here, boom, it touched. It went down just a little bit before going up, going down, and then going up, and then the wicks hit almost at my take profit. And I think I want to say my take profit, if I click on here, see my take profit is 5%, 5.41% at $74.52. Is 90.7 pips at 12 cents. So um so right now this is a daily view inside forex.com, and as you can tell, it was going down. It showed a little bit of progress of going up. So will it hit back down here? I don't know. Um I possibly may put in another buy order for down here just in case it does dip down here and I could catch it for another 12 cents, making my bid on this 24 cent, and then watch it go up to my 104.904. So I have different take profits than I have on my MetaTrader account. Um, but everything's is different. So each chart, um, depending on your broker that you're going with, is going to be a bit different of where they believe the highs and the lows are at. So it's on you to look at your charts and the different brokers that you're dealing with. So, like I said, on here I have it at 104.878, and over here I got another one at 104.759. I got a support line at 104. 130, and I got another one at 103 9. Well, I just moved it by mistake. Yeah, let's move it back up. Right there. 103961. So I can also adjust these to what's on my forex.com charts, but I just want to pretty much give you guys a general idea of where to put your resistant lines and your support lines. So if you want to get into a trade, you could say, hey, I want to get in right here, or I want to get in right here for different sales. And if I want to take my profit off of it, I would set my take profit right around here at these levels so that it traveled up and then it went down, boom. Or I can get in on a buy and I can watch it go back up. So therefore, if you would have went in on a buy at any point here, you would have been in the green when it came to money before it dropped all the way back down. You would have been went negative, and then it would have went back up, putting you inside the green or a positive area and going all the way up here before before dropping back down. So at any point at here, if you had bought down here, at any point from here to on up here, you could have took your profit and got out the trade. This is just an hourly chart. So um it's like a short term. So it's hour to hour. You can easily go into a different chart time frame once again, and you can say I'm going to my daily chart, and you look at your daily chart, you're going to have a whole different animal to look at. The daily chart is obviously take you into January, it's take you into December of last year, November of last year. So it's showing you how high it was back then, which was in the 106 area, versus where it's at now, which is like the 104. And of course, I got in at the 103 area. So if I wanted to just hold this and I said, well, it used to be up here. It was at 106. If I want to hold that, I could easily say, all right, let's go over here to my AUD NZD. I could click on that. I could change my take profit to 6,904, and you see that my reward is $238.83. That's 290.7 pips. How long would it take for that to take place? I don't know. If we go back over here to MetaTrader, you see that the change that happened from December on down to, this was like December to, you know, actually uh this was like November the 26th, and we saw a change that occurred on down to December the 10th before going up a little bit to this range was 105, and then going back down to here. You see this long wick from this area right here, and it dropped all the way down. Now, had somebody caught that down there, that would have been crazy, crazy money that they would have made on up until this time frame. But anyway, if I wanted to, I could do a longer term trade, and try to sell at the 106 range or even hold for even longer term. But anyway, this has been my video. I am Greg Bridges once again, and I am with Trading Pips, and I hope that you guys learned a little something from this video. You have a great day, and I'll talk to you guys later. Bye.